Hi everyone, delonewolf here. Welcome back to some EVE Talk, your weekly look at the market in EVE Online. And Operation Frostline is a go. I think a lot of people are enjoying it quite a bit. Now, I've been extremely tired after work last week, so I only really did one evening of a Frostline site searching. And I got nothing special out of the loot, so I'm not really sure what the loot tables are, but it looks like a lot of the really special stuff has extremely low drop rates. But from what we've heard and seen, you can actually get plex, multiple pilot training certificates, and even faction stuff out of those Serpentis sites, those Frostline sites. And on our end, we did have a few BPCs. But I think those are way more common than the other stuff. So if you want to get some really good loot out of the Frostline sites, you'll want to do quite a bit of them, and probably the best places to do that would either be nullsec, where you know you're safe, or risk going into wormhole space, which adds a little bit of adventure to the Frostline sites as well. We are here for the market, of course, and so we'll jump right in with plex. Let's see what Frostline has done to the plex market, and that's at 120. Oops, let's write that down. And you can see the pressure right here, so pretty interesting. The 5-day moving average managing to stay well below the 20-day moving average, starting to push everything down well below 1.2 billion. So plex are going for 1188 at the moment, pretty much, and the buyers 1170, 17, 18 million. Margin in between there is actually pretty high. There is obviously some pressure on the plex market at the moment due to sales with Frostline, although I don't think it's such a major sale, like 10% off or something like that. And of course, if it's true that they do drop from the Frostline sides as well, that just adds more supply. It's going to add a little bit more pressure. The question is this CCP using like plex that they grabbed from banned accounts, or are they just seeding them out of nowhere? I think it's going to be the former. If they do decide to go with plex into the Frostline sites, then I'm pretty sure that they take, like, let's say, all right, we take 1,000 out of the pool from those that we have banned. And let's, depending on how quickly people run the Frostline sites, will have a spawn rate that adapts to that a little bit, which could of course be the reason why you almost never see any of that really good loot, because people are running them like crazy at the moment. But we don't know the exact mechanics. Still, the pressure is on and plex are slightly going down, which is good news, I think, for people that are looking to plex their accounts so they don't have to pay a monthly fee. Next up, we've got the pilot training certificate. That one drops off quite a bit more sharply. Look at that, from 125 to 1.10 billion. That to me would indicate that these definitely drop from the Frostline sites, and maybe they're more common than actual plex. I think it's a possibility. That is a little bit weird though. It would be CCPs saying that basically they feel okay with adding just straight up multiple pilot training certificates to the game. I'm not sure, but it's definitely different. We are at 1.123 compared to 1.187, 88. Yeah, that's definitely a difference. There's also a clear difference in the graph right here with a sharp drop off. So it's going to be interesting, I think, to see exactly, or to try and find out what exactly the mechanics are when it comes to plex and multiple pilot training certificates dropping from those Frostline sites. But this is pretty sharp, and so if you're actually looking to start training on a second character, this could be a good time to actually make a move on them, because they're actually quite a bit lower than plex already. This is going to add a little bit more pressure to plex itself, of course, as well, because there is this strong correlation between these two items. And so I think it's looking good for plex to actually pull back a little bit more as Frostline keeps going. The question is going to be, of course, what's going to happen next year after all of this will have been digested by the market. That could be interesting as well, coming up with the first expansion in quite a while. So I think we could be on in for a wild ride when it comes to plex. Maybe a bit of a more serious pullback now with a longer sale, with the holidays, people coming back willing to spend some money on ETH, and then after that, of course, preparations for the expansion could have the exact opposite effect. So yeah, keep an eye on that. There may even be a good investment opportunity in this. Next up, the body resculpt certificate. That one is going down a little bit as well, although yeah, I would say maybe like in between the other two. So here for plex, I would say that there's clearly like a maintaining of the distance between the 5-day moving average and the 20-day moving average. There's a clear sharp drop off for the multiple pallet training certificate, but then here for the body resculpt, it's a little bit in between both of them. So I guess that this item is just feeling the pressure that is happening in anything Aurum real life money related, and so that one is going down just a little bit, but I think that's just basically normal at this point. So interesting week, of course. The Frostline events are going to have an interesting impact, I think, on the plex market dynamic, and then the expansion could have that as well. I definitely look forward to seeing what's going to happen exactly. Next up, we'll move on to some minerals, and that would be 6 minutes. So let's write that down, and goddamn, my second mouse is acting up over here. Let's try and fix that. There we go. So this is titanium, and my expectation from last week is not met because titanium actually pulled back. I thought if any of the minerals still had some room to grow towards 6.5, it would be titanium, but it looks like titanium has found its price and it's gonna start hovering in the 6.2 to 6.4 is price band right here. You can clearly see that the 20-day moving average is right on the 6.3, and that it's up and down from here. So let's take a look at some of the volumes here. Coming in 103 million to 65, another 100 million. On the demand side though, keep this in mind, 1.6 billion, 1 billion, 1.7 billion. Those are way bigger numbers. Still people preparing for whatever is gonna come next in EVE Online. I think all of this is not just investment, but also preparation for the Citadel expansion. And so keep that in mind. I'm still seeing in the volumes some pressure on titanium prices going up, but it's pretty clear that people are willing to sell some of their stocks at like 6.4 ISK as well, trying to make some money, some liquid ISK from this. And so to me, it's really starting to look like the price has been found despite those huge buy orders in volume, and that will start moving around 6.3 for now. So that's pretty interesting, a nice retracing of the losses for titanium, and I think this is a more than generous price for high-sec miners that don't want to risk NOSEC and stuff like that for their titanium. Next up here we've got pyrite. You could say that it is pretty similar. After reaching a top of 11.7, it had to do a little bit of a pullback, but now it's moving in the 11.10 to 11.5 price band, something like that. The 20-day moving average clearly right smack in the middle of that, just above 11.3 ISK. And so it could be a similar story. It just looks a bit more violent, but keep in mind this is not that much difference between the peak and the bottom right here. Let's take a look at some volumes here as well. 180 million to 60 million on the orders here. That's maybe 500 million units. On the buy order side, 200 million here, 237 here, another 250 here, which is already quite a bit older. I have to give the advantage, the edge to the sellers. Actually seems like there's some pressure on the price for pyrite, so it is obviously going down, but keep in mind, as we'll come closer to 11.10 at 11.31, we still have a little bit of a ways to go. It's pretty obvious that it's going to swing on the other side again, and that people will not be dumping that much pyrite anymore for those lower prices, allowing it to go back up a little bit. So yeah, I think that this is the price range we're looking at the moment, with on average just above 11.3 ISK for pyrite, which is okay. I just don't feel it's done that well in the full retracing compared to titanium. But alright, it looks to me like pyrite has also found its price range for now. Next up here we've got Mixalon. Alright, it's finally starting to look like a similar story here as well. Mexalon managed to go up to 70 ISK for a moment here in a pretty sharp rise, and was then on basically a steady slow decline towards 60 ISK, but here it does look like we had a bit of an hesitation. 5-day moving average just jumping above the 20-day moving average, a little bit of a move back up here, and so I think that means that Mexalon is also finding its price range. It's just a little bit harder to tell now because of that one data point, so you can't really see the ranges too well, but I would say 60 to 62 ISK is where Mexalon is going to start moving sideways here. So let's just end up with a look at some of these supply and demand numbers as well. Supply, look at that, pretty high, close to 60.9 though, 23 million, 38 million, 28 million, and then on the buyers you have to go a little bit lower to find one big order of 121 million. And so again here, slight pressure on the price due to higher supply than demand, but once the price goes pretty low and starts touching 60 ISK, I do think it's just gonna dry up, and that we're in for this sideways movement now for the high-sec minerals. Pretty interesting stuff in my book. Here we've got Isogen, again a really, well, not as sharp as Mexalon, but a significant increase in price from below 100 ISK to above 125. Then it had to drop off a little bit, and now it's trying to find its price. The question is, again, it's hard to see on this chart, so let's also go for the 3-month chart. I think it's trying to stay, well, if you want to be safe, you could say 112 to 118, something like that. Where it's going to start moving in between. 116 as the average for the 20-day moving average seems to be about right. And so let's see if once again there is this pressure from supply, but considering where the prices are heading here down below, it could be that it's drying up, or that's what I would like to see. So let's take a look here. What are the numbers? 16, 17 million. They're trying for 114.50. Okay, then here we get another 14 million, another 1.3, but here we get 17 million, 39 million, 13 million, which is a bit more balanced, I would say, in general. And so I think that what we're in for now is that the decrease that you're seeing on the chart here is actually going to stop and start reversing at this point, because it's low enough for the market. I think that people are not going to just dump any Isogen that they make at the moment, and they may just hold off for just a little bit. So I'm definitely reading this as all the high-sec minerals finding their price ranges and starting to stabilize after recouping quite a few losses which had incurred during the rebalancing of null-sec ores. Let's take a look at the in-between one. This is Noxium, which has sources in high-sec, but I think most of it comes from null-sec. And unfortunately for Noxium, it looks like the pressure is back on. It managed to bounce back a little bit to above 500 ISK with a bottom, double bottom right here at 470, but you can clearly see that we're heading back down already towards 480, 485 for the sellers, 477, which is not in the station, but 470 for the buyers. So we're definitely heading back, and despite one big order of 7 million units, you have to go quite a bit lower to find another one for 1 million units, and despite that we're still seeing 4 million units coming in less than 24 hours ago, and a few other ones waiting to keep the price from really increasing once again. So this is bad news for Noxium, and I think bad news for null-sec minerals in general. They just have an oversupply situation at the moment, and this is why we're seeing this pressure on the price. Now when it comes to the megasite, you can see that it bounced back a little bit, but I don't think that we should read this as, all right, finally megasite is going to come back. I really don't think that's happening. It's because it rushed back down. At first it was hesitating at 1300, it broke that, and then it rushed right back down towards 1100 ISK. And yeah, at that point, of course, the market said, okay, that's maybe a little bit of too sharp of a decrease, and so we're bouncing back. It's also possible that these will finally start to find their ranges. That 1100 could be the true bottom for megasite, but of course the Noxium pressure that we're seeing here is bad news. So it could be that this is not even the bottom for null-sec as well. Let's take a look at some supply demand here. You get 1.5 million, 2.23 million units coming in. All of this is still less than 24 hours old. Keep that in mind. Even these 5 million units here, compare that to the buyers, which have a few that are trying at 1090 right here, which is below 1100 ISK. I'm still seeing that pressure here. So it's going to be pretty interesting to see after this bounce back if Megasite manages to keep that price of 1100 alive. But what we saw a few weeks ago is once it broke 1300, the psychological barrier for the market was completely gone, and it went way down to 1100 in one fell swoop. Now it had to recover a little bit from that, but on the buy order side I'm still seeing just demand wanting to go lower, and supply still coming in despite all of that. So it's a dangerous situation, and it could be that despite the really serious pullback that has already happened in Gnostic Minerals, I'm seeing some signs that it may just not be enough. Next up here we've got Zydrine, really similar situation here. It tried to defend 1000 ISK for a while, but of course we make a site at 1100 ISK, that's hard to defend, so it broke that, and now we are on our way down for Zydrine as well. 922 for the buyers, 942 for the sellers, and despite the fact that you're seeing the chart here at its low point in the 6 months, and at a very low point, you could say, compared to the rest of the chart here, you're still seeing 1.3 million, 6.2 million, and 1 million units coming in. So I'm reading this as be careful for the Gnostic Minerals, because their pressure is still on, and they could go even lower. The High-Sec Minerals, though, I think those have finally stabilized and have found their price ranges. I think this is really interesting. The impact on this for Tech One produced stuff should be some pressure on the price as well. It should give manufacturers some more breathing room, and it could be interesting for the Citadel expansion as well, seeing how low these Gnostic Minerals are. If you feel the need to start making up some stocks, then this could be a good time to jump in and try to pick some up with buy orders, because it's definitely possible considering the chart right here. So let's take a look at the impact on Tech One chips, 1635. And let's see if there's anything that is showing up as true for some pressure due to lower mineral prices. One thing to note, of course, is that the bigger the ship, the longer the cycle time. So I do think it's normal that the Armageddon is not responding to that immediately. In fact, I think all of them may still need some time to digest what's actually happening in the mineral markets, because the High-Sec Minerals did jump up substantially. So at the moment, they've just basically nullified each other's movements, but the continued pressure on Gnostic Minerals could start putting some pressure on the Tech One prices, which I don't think we'll see right now, especially not on the bigger ships. So here's the Armageddon actually managing to maintain a price just below 210 million. Not bad. 20-day moving average moving up from 206 to 2010 or towards 2010. That's not that drastic, but it's pretty obvious that the Armageddon is managing to stay well above 200 million at the moment. Here we've got the Caracal. That one is alright, coming back down substantially towards 11 million ISK, which is pretty good, I think, on the low point for the last 6 months. Yeah, 6-month chart right here. Okay average, I think, for a cruiser. Supply is still decently, well, actually pretty well alive here. 406, 115. Those are pretty big numbers less than an hour ago. So despite the lower prices for the Caracal, we're still seeing quite some healthy supply. The question is, will an alliance trigger at like prices close to 11 million and say, okay, a few Caracal fleets, we can always use that and buy out the market? It's been a trait that we have seen in the Caracal market, some volatility due to huge buyouts from alliances. Still, this is decent supply, and so looks like the Caracal has finally recovered from the increase in price that happened a few months ago. Maybe I should quickly check on Armageddon supply. Yeah, that's really not too good. So if you can't produce Armageddons, I actually think that's a big reason why we're seeing this increase in price here. And I think if you do the calculations on the blueprint, you'll see that you have a pretty healthy margin at the moment. Next up here, we've got the Dominics. Also some pressure right here after a nice spike that happened like, what would that be? Mid-November, something like that. Obviously something happened here, but it's also starting to recover, heading towards 195 for Dominics. Pretty normal price, and supply wise this is pretty good actually, almost this entire front page, with even 49 of them coming in as the second to last order to have been plunked down here. decent supply, healthy market, and price finally stabilizing back to a normal 195 for the Dominics. Looks good for some more stability finally. With stable minerals, it could definitely translate to a more stable Tick 1 market as well. Here's the Drake Den also coming back down a little bit, recovering towards 53 million ISK, which I would say is around the average for the last 6 months or so. 3 months ago below that on average, and then above that for a while, now back down again. So the Drakes, what is the supply looking like? Not too hot. You do still see 6 of them coming in the last 24 hours, but on a volume of almost 100, that is not that great. So I think that this downward trend is definitely going to stop at this point, unless someone comes in with a lot of Drakes. Expect that to slowly start creeping back up. But there is still decent supply from previously that has been dumped, where people said, okay, I have 3 months to try and sell these, and or expires in, yeah, look at that, 65 days, yeah, up to 3 months. Here's some stuff that's been on here, that's only here for like 2 weeks, that may get replaced after that, but there are enough Drakes floating around to actually maintain a price close to this price range. Next up here we've got the Mauler. After that big spike right here, has recovered, but going back up a little bit towards 12 million, and now the pressure I think is back on at the tail end. Yes, it is. Will we go back to 11 million? That may take some time, but well, yeah, that may take some time because supply just isn't there yet. There is healthy supply less than 24 hours ago, 32, 47, 27, but we don't have those historical orders that are actually keeping the price in check, keeping a more constant pressure here. So that still needs to build. Keep in mind, it must have been pretty violent right here with pretty much a full buyout of the Mauler market causing this spike here. So just give it a bit of time. I think it will all come back as well for the Maulers, and that we will actually stabilize towards 11 million when that happens. Next up here we got the Myrmidon. Again, some volatility in the first half with a spike up to 60 million, and now we're heading back towards 55 million for Myrmidon. I think it's pretty much all right. 57 for the sellers, 53 for the buyers, and here well, again, not that hot. We only have one of them coming in the last 24 hours, so be careful for the Myrmidon. That one is starting to go back up a little bit, and unless more production comes in, it could go back higher once again. Could be another good one to actually start producing and maybe bring to the market. Do your calculations on the margins and see what's best, of course. But yeah, the Tick 1 market, it's showing signs that it's finally stabilizing, but some of them, yeah, they may need some more production going towards them. Here's the Oracle then, also going back down. So I think, well, and being bought out, we're not seeing the supply coming in that much. So the pressure is going to be back up from 80 million, 81 for the sellers, but yeah, this will, I think, be bought pretty soon, and then we will be going back up for the Oracle prices. So I'm a little bit surprised by this. I was expecting a bit more supply across the board, a little bit of a more healthy general Tick 1 market, but it's just not happening. A lot of them recover, but then just don't get produced anymore, and so in for another increase in price. I think the Oracle, the Myrmidon, and which one was it? The Mauler? No, the Mauler not. Nope, the Myrmidon and the Oracle are definitely set for a scenario like that. Next up here we've got the Raven, settling at around 190. Supply, that's what I would like to see, right? Some historical sell orders that are still there. That will keep the price in check. So the Raven, yeah, 190 for a Raven, I think pretty much normal for a battleship, and actually recovered a little bit from going as high as 200 million, and now with healthy supply set to find its stable price once again. Here's the Stabber then, again really violent upswing here, recovered to 11.5 million. 1 million higher than what we were used to, but again some volatility to be spotted here, so I suspect that we are not seeing that many Stabbers coming to the market at the moment, and it's exactly that. These are still drying up, so some Tech 1 chips drying up, increasing their price, showing some volatility. Here's the Tornado then, again stabilizing at 74, but is the supply healthy enough? I think this is, 108 here, 13, 18. This is gonna keep the price of Tornadoes in check for a little bit. But it's interesting that quite a few of them actually show this pattern of drying up a little bit. Here's the Typhoon also recovering a little bit after increasing in price substantially to 194, which I'm personally reading as just bringing them in line with the other battleships. And supply, this looks alright. For a battleship, this is pretty healthy. We still have 11 and 15 coming in right here. So Typhoon coming back up a little bit here from reaching 182. So trying to find its price range once again. Looks pretty good. Here is the Vexor as well, trying to find around 11.5. I think this will be healthy. This is decently healthy. Just look at the supply numbers here, 12, 30, 51, 57. It's gonna take some time, but it's interesting. The Tech 1 market still has not fully recovered. It may just be that there is lower industrial potential out there at the moment. Could be because people are stockpiling in expectation of the citadels. It is a possibility. Could be due to just lower activity, but there are some ships that are just not being produced enough for the market, causing them to spike pretty heavily in price. Of course, once an opportunity like that is spotted, the industrial guys tend to be able to respond to that pretty quickly. But I'm like in the Armageddon, look at that, really going up in price substantially, and it's been pretty dry for quite a while already. So yeah, Tech 1, it could be good indeed to check out some industrial potential, to see if you can make some profit out of it, because at least in some of the ships I'm definitely seeing an opportunity for that. I'm not seeing this all around super heavily stocked Tech 1 market with very stable prices. No, there is a bit more volatility in it, and it looks like the industrial guys still have some catching up to do to exactly what's happening in the Tech 1 market. Pretty interesting once again, especially considering that we may see lower mineral costs in general. So I definitely see some opportunity in there, and I'm actually starting to be a little bit happy that I've been focusing on industry at the moment, trying to build up everything. But it's the exact same situation for me. I'm not building huge amounts of ships. I'm building ammo. I'm building stuff that I know, that I'm certain about, because I want to actually make profit, be able to set aside in preparation of a citadel. So the industrial guys, they may just be holding back a little bit, building up stocks in expectations of the expansion, and this could be why we're seeing some of these ships basically dry out in the market. Next up, we've got Tech 2, and I still have 1 hour to finish Eve Talk. That should be possible. So Tech 2 at 2740. And let's see if there are some trade opportunities here. I will go through this a little bit more quickly, I think. So here's the Basilisk. Because it's trying to go down towards 180, it could be interesting, but this one button at 175 makes it pretty dangerous. The buyers are at 176 though, so this is starting to be interesting to invest in some Basilisk. If some volatility is triggered at some point, then this could be the right time to jump in on investments. A lot better than like close to 185, where it's been hovering for quite a while. Next up here, we've got the Cerberus. I think a lot of people did start to make their move on the low point for 6 months, so we get a little bit of a spike here, but just not enough to say that you would have made any profits here. 172 for the buyers, that's still really good. So I actually think that the Cerberus, despite the slight increase in price here, is still in buy order territory, because you could still pick up Cerberuses below 175, and I think that that's not bad as a longer term investment. If you get an opportunity to sell at like 210 something or above 200 million, which I think you can on some volatility, then that's definitely not bad. Here's the Guardian then, apparently taking off a little bit. You could have bought them for 130, maybe below 130 on a lucky buy order. Right now you're selling for 143, that's a bit more than 10%. That's looking quite okay, I think. So slight opportunity for the Guardian to sell at the moment, which is pretty nice. Next up here we've got the Hound. That's one that I really don't like. Look at that, the bottoms increasing, the tops decreasing, finding itself at 17 million. I would need to see buy order prices below 16 million if I would say, okay, the Hound is definitely starting to come back down and it has a chance to trigger some volatility. I'm not seeing it for the Hound here. Next up here we've got the Ishtar. This was an okay spike, but from 155 to 170, around 15 million, less than 10%. So it's just a little bit too small. And what I'm fearful about is this pattern. If right now it stops at 160, you've got once again the bottoms increasing, the tops decreasing, and so less volatility in the Ishtar, finding an average price, fewer chances to really make some money on some cheap buy orders. So nope, I don't like the Ishtar at the moment. Here's the Manticore, just way too stable in general. This one spike that was a huge opportunity that I missed, I don't think it makes up for the risk when you're seeing a 6-month chart with only one significant spike and such a flat chart. So nope, don't like it once again. Here's the Nemesis. I do like this though. Clearly at a 6-month low, you're picking these up for below 16.5 million. There is still decent supply, so I actually think you can build up some stocks of the Nemesis, and I do think at some point you'll be able to sell these close to 20 million. It has to happen. I mean, granted, it's a little bit of a gamble. You're never 100% sure, but considering this chart, I do think that this could be a good investment medium to longer term for some Nemesis. Next up here we've got the Oneros. This is pretty good, of course. Two nice price spikes from 140 to 175. That's 35 million, 20%, even more than that, I think. That's definitely not bad. Then coming back down to 145, another spike to 175, now back down again. Where are the buyers at? 146, a little bit higher than I would like. So you do see this pattern of volatility starting to decrease. But considering the percentages we're talking about here, the Oneros has definitely been the one to take some gambles on. And at the moment, well, you could gamble on the buyer side because we are flattening down at the 150, but personally I would like to see it back at 145 on the chart, and if we're heading there, then I would say sure, if you can pick him up below that, you're doing a good deal. Next up here, the Purifier. Again, I don't like that it's only one price spike, and 6-month low, we're close to it, but it's been there before, so it's definitely not like the Nemesis. So yeah, don't really like that one as much either. Here's the Scimitar. That's pretty nice, from 165 dropping down to 125 pretty quickly. This could be a really good one actually to invest in. You're picking them up for close to 120. One thing to keep in mind, of course, I think it's the 2 logistics frigates that were added to the game. This could be the reason for the pressure on all of these logistics cruisers. So keep that in mind. But I think once they've been tested out, once they're a little bit out of the newness for these ships, that could actually be a good trigger for these to come back, these cruisers, because, well, medium reps, better reps for capital ships, that could definitely be something that you want and need in nullsec warfare. And so you know, the pressure could be on because of those new ships, but if it turns out that those are a little bit harder and that it's just better to go with the cruisers, sometimes bigger just is better, then they could make a comeback, and investing in these that are at their low points could be a good move. And then finally here we get the Vengeance, and I'm still keeping it in here just to finally maybe see a sign that the assault frigates are coming back with some volatility, but they're just out of the meta at the moment. They're not that interesting, they're not used that much in faction warfare, so these unfortunately are way too stable to trade in. Next up we've got the Tech 3 market, 34 minutes. Let's write that down. Yeah, let's check it out. We'll just go over the list here. The Confessor going back down. Did I make... I spotted one that was ready to trigger. Again, I just don't really remember which one anymore, but all right. The confessor went as high as 65. Now the pressure is on due to decent supply. You can see that no more new supply, or not that much new supply, is coming in. Well, still 48 of them right here is going to keep some pressure on the confessor alive. So 55 million at the moment, and no sign that it's going to dry up all of a sudden or anything like that. So confessor set to look for a price around 55 million. Next up here we've got the Hecate stabilizing at 55 as well. That's pretty interesting. Is the supply healthy? That looks quite okay. In fact, all of this, the front page is less than 24 hours old, so people definitely made some Hecates to keep the price from going up too drastically. This is a healthy market. Hecate is set again to stabilize at 55 million. Here we get the Jackdaw price spike up to 65, stabilizing below 60. What is the supply looking like? Okay, not too bad. Honestly, half a page, less than 24 hours old. Still, we've got 10 of them coming in here. It seems like we may need a bit more to bring it down to 55 million, but I don't think that the Jackdaw is just gonna get bought out all of a sudden at these prices. And so finally, maybe some stability for these destroyers. Next up, we've got the Zwepel. We'll go for that one as well. Stabilizing at around 55 supply. That's really not bad, except all of these are just a week. So be careful on that, but these are huge volumes, of course. So the Zwepel looking to stabilize here as well. So interesting, we're finally seeing that the Tech 3 industrial potential may be making a bit of a comeback, and that all of them are well stocked at the moment. So I'm not really seeing anything to preclude a big price spike or a problem or a very sharp drop, except maybe in the Zwepel, because these are quite a lot of Zwepels at the moment. Then for the cruisers, let's start here with the Legion. Went up from 160 to 200. Pressure is on a little bit, but managing to maintain a pretty high price. 190 for the buyers, 195 for the sellers. 26 of them coming in here. Should keep things in check as well a little bit for volatility, so that's pretty good. Next up here we've got the Loki, went up from 170 to 200 as well, starting to stabilize at 190. Supply wise, we've got 27 of them coming in here. Almost half a page of orders less than 24 hours old, so this is looking to stabilize as well, I think. Next up here we get the Proteus, went up to 240, dropped back down to 190, and is stabilizing here as well. It's almost looking like some big players have said, okay, you know what, we're okay with these margins. We may not need all of this volatility, because again, decent supply, less than 24 hours old, stabilizing just below 190, starting to look like it. And here finally we've got the Tengu, went up to 200 again as well, and now it's starting to stabilize. Yep, above 190, 193, but a bit more supply available here. So this is interesting. I'm seeing the first signs of lower instability in the Tech 3 market, of the destroyers starting to stabilize around 55 million as a price, and maybe the cruiser around 190. But at least there are volumes available on the market here now, which used to be a problem, which used to cause these huge spikes in some of them. These huge run-ups were because of a completely dry sell order market, and I'm seeing decent numbers in almost all of them. The one that is maybe that was not doing too hot when it came to the orders less than 24 hours old, was it the Zwepel? No, the Zwepel did pretty good. No, all of them seem to be doing pretty decently well. So that's interesting. For a while, with all those really big spikes with the cruiser, I thought maybe we're gonna have to start taking gambles on the Tech 3 market, but seeing this now, I would say be very careful with that. I would rather make a gamble on something like a Scimitar, which is at a 6-month low, and which you're pretty sure that you'll be able to sell for 145 to 150, and you're picking them up for 120 now. Just gambling that they're not going to be completely crushed by those new Tech 2 logistics frigates, and then here, you know, you still have better opportunities to spot volatility. It's a much bigger market, and I think a much a market that's easier to be brought out bought out and to have meta changes in them. Then Tech3, which was doing really well on the volatility front, but I'm seeing the first signs of them becoming more stable. And then finally, for the extra product at 39 minutes, I'm going to take a look at Omber. It was requested a few times, unfortunately. Yeah, sometimes I do have other ideas, but Omber has received a little bit of like a mineral rebalance, which should make it at least somewhat worth it to mine it. Omber was by far the least popular ore to mine because of its composition. That's been changed a little bit, and so let's see if we can actually spot that. So materials, raw materials, ores, and then we've got the Omber group here. So we'll start with Omber itself right here. That's, well, it went up for the up until October. Omber was below 100 ISK. Then here we've got some volatility, and now it's evolved to go above 100 ISK. So there is a slight increase, but not a sharp increase in price either. So we're looking at 160 for the buyers though, 122 for the sellers. Maybe the chart just has to catch up to that a little bit. But yeah, on Omber itself, I'm not seeing a huge swing all of a sudden, just a very slight increase in price, still from probably more than 10%, so it's not that bad. Of course, Omber is bound to be the most plentiful one, the most stable market, well supplied. This could be why we're not seeing a big impact due to the Omber rebalance. Let's take a look at some golden Omber next. This is better. You can again see before October we were well below 80 all the time, then it evolved to go above 80, and now here we're actually looking at 121 for the sellers, buyers at 86. But definitely we do see this increase in price, which means that Omber is more interesting to mine due to the changes, which is good news, I think. Same with silvery Omber, very similar. Definitely stayed below 80 for most of this time, and now it's going up, and I think it will stay closer to 90 ISK than 80 ISK. And there's not that much being sold here, so 100 is just a few orders, the rest of them here. 134, definitely more valuable than what it was before. Let's take a look at the compressed ores as well here, which may have better volumes. Well, not really. Honestly, most people do refine and then bring minerals to the market, but compressed silvery, you can see a very similar pattern. Before October 1st, it was well below 10,000 ISK, even 9,000 ISK, and then here triggered some more volatility, and here at the tail end the changes have gone through, and so now you're looking at 13,000 ISK for compressed silvery Omber. Compressed Omber did show the pattern here as well. Again, before October 1st, try to stay below 10k. Now we're heading towards 12,000. So it's more profitable, sure, to mine Omber at the moment because it's yielding you more minerals, but it's not like it's become the best ore to mine all of a sudden. Keep that in mind. I actually still think that considering the retracing of titanium, that the Veldspar is actually still a really good one to mine in HiSec. So it's interesting, of course, to see that Omber has increased in price, but the miners market tends to be really stable. It's just so huge in EVE Online that it's always going to be hard to actually make real waves here. The only thing we can say is that yes, Omber increased in value because it was changed a little bit, but it's not like this is a monumental change or something that has completely changed the dynamics in the mining market either. Anyways, that's going to be it for this EVE Talk then, guys. Thank you very much for watching, and I will see you all next time.